Hi, this is Zak Mir with the second part of the Bulletin Board Heroes yearly review, and starting off with Helium One, the fundraising specialists, and they really started off the year with a bang with the break of resistance of 0.27 pence after the two gaps down that we'd had previously. In fact, three gaps down that we'd had previously, and U-shaped reversal there. The break of the upper 20s there, upper 0.2s, took the shares up to a 10-bagger situation. In fact, we had a second gap higher at the beginning of February. So whoever took part in the placing at the end of last year had a bonanza. There was another opportunity to try and get in on the long side with the break of the bottom of the gap there at 0.69, and that took the shares up to as high as 1.5 and then up to the 2 pence level. But even if you were late in it and just got the break of that neckline there at 0.83, you were laughing on Helium One. Obviously, we've had a situation on the reverse since then as well, so the shares are dragging their feet at the moment, and we're waiting for a break of the 50-day line, which we haven't really had properly since the beginning of November. That's at the 0.96 level at the moment. Let's see if Helium One can pull itself out of trouble one more time. The problem at the moment is that we failed at the 50-day line, and we've had failures at RSI 50, so it looks as though it's going to be a bit tough to get out of this particular hole, although we do have decent support there at 0.8 pence. Moving along to the next situation, which is not quite so fraught. In fact, it's been quite a journey for Kazera over the past 12 months. The rally really here, though, started back in August with the unfilled gap to the upside above the 50 and 200-day moving averages. The 50-day line was already rising by the time that gap appeared. And we've had a rising trend channel here, basically since June. Top of the channel, still leaves a bit more upside there, around 1.95 pence. If we break through that, we could have a new leg up, which I suppose supporters of the shares would like, at up to 2.8 pence, maybe by the end of next month. But this looks solid again in the sense we've had another gap higher above the rising 50-day line. This looks like a mid-move consolidation, therefore one would be looking for 2.5 pence, etc. over the near term, especially while we remain above the 1.5 pence zone. Moving on to a stock which was very hot earlier last year, and that was core Potash with the vertical move there that we had from May. You can see that we had a couple of gaps down there and they were filled, so a gap closed by signal there from around the 0.55 pence level, and from that point we went up to as high as 2.5 pence, so pretty strong stuff there. Then we had rebounds off the rising 50-day line, which is always a nice thing to happen, and that took the shares up to a peak over 4.3 pence, but unfortunately, as you can see, the rug has been pulled. We fell out of our rising trend channel around the 3 pence level and haven't really recovered after that, but at least we had a signal there that all was not well with the break of that rising trend channel. Moving along to one of my favorites of the year, which was Mobile Streams, which basically rose on the basis that it was not going to raise any money, which is always a nice thing to do in the current market conditions. Here you can see that the rally started here with a break of the 200-day moving average, but also you can see those very, very strong candles, days when the shares opened at the low, closed at the high. Always a very good sign. You can see how many there were there between 0.05 and 0.11. So even if you missed it or you were late on that, you had plenty of upside there from 0.1 pence up to as high as where we are now, which is 0.45, 0.46. Rising trend channel there from the end of August, and interesting that the shares managed to rise without any gaps to the upside, apart from maybe that one there, which didn't really help. But rising trend channel here, heading for up to the 0.6 area, hopefully by the end of next month, while we remain above 0.4. But what a brilliant rally that was there, and rising 50 and 200-day lines there from as long ago as September. Mosman was a hero earlier in the year as well, and here you can see that the move up from, well, basically the starting gun was the start of the year, this time last year, and the shares basically breaking neckline resistance there around 0.012, and then breaking the 50-day line there at 0.014, There was a mini rally there, but the key here really is the way that once the 50-day line was rising, that basically pulled the shares up to as high as the 0.08 level at the peak in July. Disappointing that we haven't been able to follow through on that, but we did have another signal there, actually, the unfilled gap to the upside above the 50 and 200-day lines in May. So there were a couple of chances to get in there, but shares basically failing at the 50-day line in August, and they haven't really been the same since at the moment. In fact, we're still trying to work out how low they would go, perhaps 0.02. The old resistance pre-May could be a destination for the shares. Moving along to a stock which I didn't really want to cover, but couldn't resist it after that vertical move that we had back at the end of July. At that time, it was the idea was that the shares would head higher, maybe to 70 pence or so, while they remained above 50 pence. They did remain above 50 pence, and we've been in a rising trend channel since then. Floor of the channel currently around the 87 pence level, and above that, we're still looking for up to £1.17 at that May resistance line projection. Maybe that could happen by the end of March. Moving along to Ondo, which has been, after a little dip that we had in the middle of the year, came back with a vengeance. We broke neckline resistance around the 16 pence level. That was accompanied by very positive expansion of capacity news at that time. Gap higher after that as well, and basically hitting our second, third and fourth targets now in the recent past. Best case scenario is up to 53 pence, which is a line from back in 2021. So let's see if Ondo is strong enough to do that. But the overall U-shaped turnaround is looking very strong. And obviously we had the golden cross there and another unfilled gap to the upside back in the beginning of last month. Moving on to Powerhouse Energy, which probably one wouldn't think would be in the best of the bunch, but it did actually have a very good start to the year with the typical starting gun for a rally, which is an unfilled gap off the low. We had that on the 22nd of February, and the shares delivered. There was another couple of gaps there until we got to the highs around 2 pence, and a gap down to warn us that the rally might be over as well was something which was a feature of the price action back in the end of May. Current situation is that we are bouncing along the bottom of this rising trend channel from February. Need to break 1.25 pence to get confidence that we're back in business, but 50 and 200-day lines both rising. So on that basis alone, this should be in recovery mode while we're on the right side of a penny. Moving on to another stock which transformed itself over the course of 2024, Quadrise. The typical unfilled gaps to the upside, and even if you were late on them, there's plenty of juice or plenty of gas left in the tank from the 3.5 pence area. We're now up to, 7 pence plus, or we've hit 7 pence plus. Current view is that while we're above our third target at around 6.6 pence, we're looking for a best case scenario target as high as 8.6 pence, hopefully by the end of this month. But a massive re-rate for the shares, and you can see that they're still not high historically given the recent strength of the rally. Roadside Real Estate was one of the new big names for the year, and it was basically starting off its rally back in March with the break of neckline resistance, the break of the 50 and 200-day lines. There was a bit of consolidation, but basically we've been in a rising trend channel there from the beginning of March, and the floor of the channel currently around 27 pence. Above that, we're looking at the top of the channel as high as 38 pence, perhaps by the end of this month. Moving along to a stock which I don't think anybody else really looked at, but it was one of my favourites. The reason was that the giveaway was the break of that peak in November, the peak there around 0.35, 0.36, and we broke that and we had a vertical move up to 2.5 pence. So 5x on that particular move, 5x plus. Current situation we're in consolidation mode, but we hit the first three targets, and we've got the fourth target there towards 3 pence to aim for while we're above recent support at 1.2 pence. So hopefully Sealand can stay above 1.2 and head back and take out last year's highs. Moving on to Tungsten West, which didn't expect to be in this list, but was a contender back in April with a gap through resistance that we had, gap through November 23 resistance, and the 200-day line. It was a bit of a blink and you missed it affair on the upside, and also very, very volatile, but the principle there of gapping up off the lows and gapping through recent resistance did work for the shares, as did the bullish divergence with the lower lows there in the March, but higher RSI trace. But initial target here for 2025 up to 4.65 pence, while we're above the 50-day line at 2.9 pence. On to the last three, and they're all perhaps the best of the bunch, actually. The first one is Valerium, which basically broke neckline resistance near the lows around 4.4 pence, broke the 200-day moving average, which was then rising, as was the 50-day line, around the 5 pence level, and hasn't looked back since. We are nearly 5x up on that now, and still looking for further upside, perhaps up to as high as 32 pence or 33 pence by the end of January, while we're above our third or fourth target, can't quite work out which one it is, at the 21 pence level. So above 21, looking for 33 at best at Valerium. Vinanz also was a near vertical move. You can see that, in fact, the shares were rising from November last year. And surprise, surprise, the rally started with an unfilled gap off the low, and those very strong candles, multiple strong candles there, opening at the high, closing at the low. And in fact, if you look at the past year, you can see there were really 8 red candles out of the whole year on that chart. Still looks pretty good in the sense that we've got the rising trend channel there, the floor of the channel there at 14 pence. And looking for up to 22 or 23 pence by the end of February. Same, or the classic step progression there. So either up, vertically up, or sideways on that, which indicates incredible strength. Finishing off with Zenith Energy, which was a latecomer to the rises of the year, but here we had a situation which was possibly the best setup of the year in the sense that, or the most easy to work out. We had a gap down there back in August, gap higher in October, and that's a bear trap island reversal, one of the strongest signals around, and therefore entry point any time between October and December was valid. You can see now the shares have just going into a golden cross now. Hopefully the next session tomorrow will give further impetus to the move, and we're on the second target there at 3.8 pence above that. Still looking for 5 pence, or 6 pence rather, near term, and then best case maybe by the end of next month, up to 9.5 pence. But what a turnaround. And you can see also, looking historically, over the last 5-6 years, this is an extended inverted head and shoulders. So the left shoulder there, the head there, extended head, and then the right shoulder break, and basically breaking 4 pence. Has been the big move for the stock. That's it for me today. More updates in the normal way starting tomorrow.